Today, we will compare microscalping with higher time frame day trading. I know some of you have an extreme amount of potential, but wasting all your life with 1 minute charts. I'll help you today make much better decisions with your trading life. We will fully compare trading models today. We have so much to do. If you're ready, let's start. Welcome our free trading course. Our main focus is price action trading strategies and smart money concepts. If you love scalping and day trading or maybe swing trading and looking for special trading strategies, check out my free trading course. You can find the links on Google Drive or directly from my website, which is in the description. Today I want to talk about the difference between microscalping and higher time frame day trading and which one you really should trade. Firstly, microscalpers mostly base their trades under 5-minute time frames. And the most common time frame is 1 minute based entry and exits. Higher time frame day traders seek entry and exit based on 5 or 15 or 30 minutes. Some of them place them with 1 hour, but 1 hour entry is mostly swing trading. Micro scalpers usually end their trades within minutes, and regular day trading can take up to 24 hours. If you want to be a micro scalper, you need extreme focus and dedication. Other traders can do much more relaxed analysis. The problem of micro scalping is precision. You have to be precise with your entry, stop, and target. One single mistake will stop you out instantly. You will encounter higher amount of stop loss hits if you trade 1 minute charts, because 1 minute charts are extremely dynamic and highly volatile. If you want to have a micro scalper trading life, my suggestion is to you focus on one single pair. Bitcoin, Ethereum, futures, Euro USD, and just master one pair or asset class. Now, other traders should use multiple pairs because there will not be enough setups to trade. Scalpers should mostly focus on sessions. My personal suggestion is New York opening. 2 hours before and 2 hours later will give you plenty of opportunities around between 7 a.m. and 11 a.m. Scalpers generally grow their accounts much faster. This is a fact. Okay, all good, but what should you do then? In my opinion, anyone can become a regular day trader because it gives you plenty of time to think and analyze and place your orders with comfort. However, not everyone can become a micro scalper. You must be patient, really fast, and extremely dedicated. Because if you miss the precise entry, the trade is gone. Your risk-reward ratio is screwed up. Scalping is not a profession for everyone. It is extremely stressful and diminishes your mental energy. Today, I will focus on regular day trading examples rather than scalping. Much more relaxed and not stressful way of trading. You already remember our range, we used it for a long time. Notice the fine imbalance below and forming liquidity areas. Let's have a close look at the range premium and look for an entry. You can see a considerable swing failure pattern. And right after that, how the downtrend liquidity is fully cleared here. Focusing on a 5-minute chart, I will not go deeper than 5 minutes. For regular day traders, 5 or 15 minutes are the best entry time frames. It will give you plenty of time to think, analyze, and enter. Notice how the structure breaks right here, creating this magnificent imbalance with a balanced price range. Using your premium and discount array, you can start looking for entry areas. Before that, check this strong drop. All red candlesticks with long bodies and imbalances. We call this high quality move, high quality breaks, or displacement. Okay, everything is great, but how to enter this trade? Now, the beauty of using 5 or 15 minutes as your entry, You do not have to be precise by looking for an exact imbalance to enter. You can practically enter this trade with anywhere in this area. No need for extreme precision, no stress of waiting or a particular pullback. This was an 8-hour trade. This is the biggest downside of higher time frame day trading. It generally takes hours to be completed. But the solution is simple. Let's see. Let's check the algo. So the solution of higher time frame day trading is using multiple trading pairs to focus. 3 or 4 should be your maximum. You can find and open multiple trades at the same time because you will have plenty of time to trade, analyze, and manage positions. You are not stressed or rushed like scalping. Notice the liquidity sweep and rally with a break with algo. It creates this great imbalance behind for us to look for entries in the 4-hour time frame. And the inducement happens here, liquidity sweep inside the imbalance. Directly switching to the 5-minute chart, we are seeing another set of liquidity sweep right above the 4-hour imbalance. This is basically the start of power of 3 pattern, the manipulation phase. The good thing is this clear target above the mega imbalance and the trend line. You know the rest, structure break, imbalance, and the order block. One more time, you do not need extreme precision again. We are making relaxed entries with cushioned stop losses. As you notice, this was a 9-hour trade to complete. In my opinion, anyone can achieve this relaxed way of trading. Why? You are not in a rush for 1-minute charts. You have plenty of time to place the orders. Furthermore, you will not be stopped out instantly. Let's continue with algo again. You completed the first trade, and now the price induced a lot. Fully filled the imbalance, and now tapping the order block. Notice the structure shift here. Notice this tiny imbalance as for possible entry, but price never pulled back to that. You can actually enter almost anywhere after the structural shift is confirmed. But the rule is simple. The price should react somewhere or induce enough and make a structural shift with a displacement. For the target, you can use the imbalances and liquidity zones below. No need for extreme precision or perfect entry. You can make your entry and place your order. Remember, each candlestick presents a 5-minute duration. There's plenty of time to make decisions, no rush and no stress. This would be a 5-hour trade to be completed. Let's check one more example with Ethereum. Just like Bitcoin, it was also ranging for a long time. It basically created a very similar pattern. Range high liquidity sweep and provided us a clear target to aim for at the range. This time we will focus on a 15-minute time frame, a much higher time frame to enter a trade. Notice the internal inducement area inside the range premium zone, filling the imbalance and sweeping trendline liquidity. Notice how the structure shift happens here, creating a nice imbalance area and the order block. I know many of you took this trade I saw on Twitter. This was an average of 8 hours of trade. So what is the conclusion here? Normal day trading setups take around 5 to 10 hours to be completed on average. If you use 3 or 4 pairs to master, you can find 1 or 2 good setups every single day. No stress, no rush, no pain. In my opinion, some of you can become much more successful at this rather than micro scalping 1-minute charts, which many stopped out a lot. Okay folks, remember, you could be an amazing day trader but wasting your time with 1-minute charts. I believe that this will be really helpful in your trading life. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon.